There is a 76% chance that this rally will turn around, that the bear market will continue. Yet, I am still buying into Bitcoin. I buy Bitcoin even though the chances of winning are only 24%. And here is why. What we see over here, that's the Bitcoin price with its 2-day moving average. So it's almost the exact same line as the price line, that's in orange, and we've got the 116-day simple moving average, 116. That's the line in blue. When we run the numbers, when we run the simulation of buying and selling Bitcoin, that would have been the very best approach. As in, we would buy whenever we are above the moving average, we would sell or even bet on falling prices whenever we are below. I've tested all the moving averages, and that particular combination, the 2-day plus 116-day simple moving average, is the best. And since we have now just gotten our cross, we should bet on falling prices. Now here's the problem. When we get a signal like this, in 76% of the cases, we actually fall back down below the moving average again, as we did in April and May of this year. We would have bought over here, we would have sold over here, we would have lost some money. This was what's known as a fake out. There is a good chance that this is another fake out. Let me show you exactly the numbers over here. Had you bought and held Bitcoin throughout the backtested period, you would have gotten 22% per annum. Had you traded according to those two moving averages, the 2-day and 116-day simple moving average, would have gotten much more, 152% per annum. A very nice Sharpe ratio, a very nice Sortino ratio, a slightly higher maximum drawdown because we do use some leverage, 2.5x long and 2x short. Still, the average drawdown duration is shorter compared to just buying and holding. The backtested chart looks very interesting, as in the Bitcoin price is at the top. Then here we've got the portfolio value measured in US dollars. That's in blue compared to buying and holding Bitcoin. That's this gray line. And at the bottom, we've got the portfolio measured in Bitcoin. So how much alpha do we really produce? Now again, why would we buy now, given that there is such a high chance that we fall below again? Let me show you again the numbers. And here it becomes interesting. The backtest starts in 2018. And we made 49 trades, right? We either bet on a rising price or on a falling price. Whenever we bet on a falling price, our win rate is only 24%. We are wrong in 76% of the time. But the reason why we still want to follow that trading signal is because the money we make whenever we are right is much, much more compared to the losses that we have to endure when we are wrong. A winning long signal with that leverage makes almost 700%. A losing long signal loses only 14%. So what we're doing here is we let our winners ride and we cut our losses early. That's the nature of trend following strategies. We cut our losses in case we are wrong, but if we are right and we get a real trend breakout, the winning trade can be 55% in this example times 2.5x. That's the leverage that historically had been the best. Just have a look at how this develops over time, right? This was a bullish signal and then we exited very quickly when the turnaround did not happen. We had another bullish signal here, we exited. Then we got another bullish signal, but here the gains were quite significant, 45%. We get another fake out and here we get another good signal, this time 136% times 2.5x. In other words, going long now, betting now on a rising price of Bitcoin has a very high likelihood of not working. But in case it works, the payouts are massive. Now, Bitcoin relative to technology stocks has been cheap for a while. This is the Bitcoin price divided by the NASDAQ 100. And that's actually one of my theories why the price is suddenly shooting up. Because artificial intelligence stocks were struggling quite a bit in the last weeks, right? For example, SK Hynix, the second largest stock in all of Korea, it suddenly crashed 55%. Now it's slightly recovered. But clearly the trend doesn't look as healthy anymore and there is reason to potentially take some profit. And maybe parts of that profit now went into crypto. So as we've got two competing risk on investment vehicles, right? AI stocks versus Bitcoin, people might just shuffle their assets around, right? Whatever has currently rallied, that's where we take profit. whatever has dumped, that's where you potentially buy. That's at least the smart way of investing. And Bitcoin, relative to tech stocks, had been very cheap. How much more upside is there? If we just take the last all-time high as a reference point, Bitcoin could outperform by more than 90% from here. If that's really a price increase of Bitcoin, or if that's rather a price decline of technology, or a combination of both, I don't know. And it's also hard to say how consistent that outperformance is, right? We had bounced over here, we came back to the low again, then we rallied, we had another retracement. So it's definitely not just smooth sailing. But the momentum for Bitcoin relative to tech stocks seems to have now turned around. I think it's okay to be cautiously optimistic. Bitcoin is a better investment than many AI stocks now. And while there is a great chance that this is yet another fake out, in case it isn't, then the money we would make with a rally would be significant. Down below, there's a link to this page over here, Gerhard AI. All of the content of all the published videos, be this in YouTube or be this in the premium membership, is available in this chatbot. You can ask it about the copy trading. You can ask it about trend following strategies. You can ask it about anything. It's completely free. The link is in the pinned comment. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time. Cheers.